Hi everyone, this is Jack Wang of Longhorn Financial. Welcome to this episode of the Personal Finance Playbook. Taxes, something that no one really likes to think about, aside from when we have to file each year. But taxes are a year-round issue that you can plan for. After all, it's one of our biggest expenses, but we pay it, but we don't necessarily see it because taxes are just taken out of our paychecks or just added to our purchase. Here to share some year-end tips for individuals and small business owners is my good friend Lisa Wright of Bookswright Advisors. Now recently, newly to Westford and also with an office in Arlington. Welcome to the show, Lisa. Glad to have you on.
Thank you very much, Jack. Great to be here.
Awesome. Let's get right into it. So,
Okay.
Lisa, for tax preparation in general, and I know that people probably aren't necessarily thinking about this because we do still have a little bit of time, but there's so many choices out there, but you have two little letters at the end of your name, right? EA.
Yes.
So share with our viewers a little bit about what that is for people, because people I'm sure have heard of CPAs,
Yes.
but not necessarily EA. So share with our viewers a little bit about what is an EA and what does it actually mean?
Okay. Well, EA stands for Enrolled Agent. It is a term from the IRS, and we are licensed by the Internal Revenue Service to be tax professionals. And we take rigorous exams, there's 3 parts, solely focused on just taxes. Unlike other folks who are licensed to do taxes as well, which are CPAs, that's a certified public accountant, and an attorney, which could be a tax attorney or could be attorney practicing other legal issues. They typically don't focus solely on taxes like enrolled agents do. Enrolled agents, that's all they focus on. And there are only three certifications, licensures, that are recognized in front of the IRS to represent clients, and those licenses are an enrolled agent, a CPA, and a tax attorney.
Okay, interesting. So not sure, not sure how many people know that because after all, you see the commercials for the large tax preparation firms. Obviously, the software packages are available out there, right? And certainly CPAs because they've been around. So that's good to know.
Well, one more thing on that, though, is the IRS does not have the funding to promote enrolled agents. And that's why the general public doesn't hear of this designation.
Okay, but you still have to take an exam, like you said.
Oh, we take 3 of them. They're very vigorous.
So
yes.
yeah, so it's no joke.
Yes.
Yeah. So one thing about taxes, and who knows what's going to happen with the tax changes coming up, and we'll talk about that in just a moment, but on average, people, I think historically get something like $1,500 or so as a refund. And I know that this is a question that I get all the time and I see asked all the time. What's your personal opinion about should people sort of get that refund, or should they try and adjust their withholding so each year they don't get a refund? What's your personal opinion about, generally for people, for them to do?
Well, right now, I suggest folks go to the IRS website if they are an employee and do get a W-2. They should be checking their withholdings on the withholdings calculator. There is a withholdings calculator right on the IRS website to make sure they're withholding enough taxes so that they're not owing in April or whenever they do their taxes early next year. Because the tax law changes this year, we are losing lots of deductions as individuals. And the federal government is afraid that folks are going to be in the dark on this and they're not going to withhold enough taxes and end up owing next year. So that's my number one thing. So I think this year is sort of an anomaly of change in reference to your question of, do you want a refund or do you want to come out to 0 or do you want to owe? So the general thought on that is, well, it's personal preference. Some people like that refund because they aren't savers. but other people don't want to owe because they don't want the federal government using their money.
Right.
So, I mean, they don't want a refund because they don't want the federal government using their money. So they don't mind owing a little bit or breaking even.
Right.
But really having a grasp on where you are in what you are going to owe is important. And if you're an employee, your withholdings should be able to take care of most of that. If you're a business owner, that's another entire story.
Right, and I know we're going to talk about business owner tips a little bit later. Before we get to some year-end tips for individuals, you and I, before coming on set, we talk a lot about the notion of tax planning. I mean, because I know when I talk to a lot of people, and of course you see that out there on the internet, I always get the proverbial image of, yes, I'll go to my tax person with the shoebox full of receipts right before I need to file, right? Hand over the receipts and then you take care of it, right? But that's not always the best strategy. I know,
it's not.
So talk a little about tax planning and sort of what that entails. And specifically, something I'm going to ask you is, what are some things that you would encourage individuals to come see you or talk to you at least before they do? What are some of those things, right? So talk a little bit more about the tax plan in general first, and we'll get to some examples.
Well, typically, folks make the mistake that they go to their tax person after they've done something or they made a big decision. So after they find out that they're going to have a child or that they decide to get married, they just came back from Vegas, they eloped and they got married. They just bought a house. They just made a huge investment. They just bought a business. They just bought a rental property. They just bought a vacation home. They just, they're putting their son or daughter through college, and they are using, a certain type of investment to do that. Or they decided to make withdrawals from their retirement plan investments, which can be catastrophic to families. Or they decide to use retirement funds to start a business. Any of these things. Or they have a death in the family, or they, in which they're going to inherit some money, or they are taking care of siblings or elders. So all these scenarios, people think that they are the ones. Obviously, it's their life, but they are coming to see us after they've made the decision, or they've done the thing that is going to impact their taxes, and then it's too late because it's already been done.
You can't unring that bell.
I can't unring the bell. We can try to fix it and do what we can to, mitigate the owing the taxes or the problem that it has caused. But what I try to tell my clients is to, please, if you have anything come up during the year, this is during tax season. I always tell them, please, reminder, if you have anything come up during the year, don't be afraid to call me. Call me anytime you have a quick question, because it's so important to have that relationship where you can feel comfortable talking to your tax person and trust them for advice.
Right. But that doesn't necessarily mean that you're going to tell them not to do it. It just means that, hey, if you're going to do X, just be aware of the tax consequences. Or maybe you might want to do this a little bit differently.
Exactly.
Right. So, but you can help guide folks through that, right?
Absolutely. There might be another idea that I've had experience with another client that we worked on this sort of the same subject, but we did it a different way, or we used different funds to do this, or there's all kinds of. You have to keep in mind that the tax code is made up of over 10,000 tax laws, and if you put it all together in a book, it'd probably be nearly 9 inches high.
Right,
so,
in very tiny print.
Yes, so there's a lot in there to know about.
Right, right. Because I know when I talk to folks, that is very common, and I know you and I have talked previous to this about someone who mentioned that they sold some stock they're worried about the taxes, and now they want to know what to do with it. And we're coming on year end. And again, like you said, you've already taken the action. Very, very difficult now to sort of manage around that, right? So always have that conversation before, so you at least go in eyes wide open, right?
Yes, and in those circumstances, you're going to pay the taxes, but if you pay before year's end, if you know how much you owe because you've made a certain transaction, you can at least mitigate the interest and penalties by not paying it enough. So you can make those payments before year end so that you can at least say, okay, well, I'm not going to have the interest and penalties because I didn't pay in time.
Right. So those are some great examples, but let's talk a little bit about just sort of overall some year-end tax tips. Like you said, the tax law changed pretty significantly for folks. Checking on their withholding is a great tip before year end. What are some other top tips that you recommend for individuals as they approach year end so that they're not going to get stuck with a huge bill next year or whatever the case may be?
Okay. Well, for individuals, I would definitely go on and check their withholdings if they are on a W-2 and they are an employee. For those folks who have capital gains and investment income, I would definitely see what those amounts are as well, because that's part of the planning. For those folks who have stock options or restricted stock units or in an employee stock purchase plan where they're receiving shares, a lot of those are run through your W-2 to pay the taxes on those, but many times it's not enough, and that could be calculated to see if that's on point with the amount of tax that would be due. There's a lot of deductions that aren't going to be available this year and for the next several years because of the new tax law. There's a cap on the state and local and property taxes on the Schedule A of the itemized deductions. So that is now capped at $10,000 for everyone American. And also the 2% miscellaneous itemized deductions that you used to be able to have for bank security boxes. What do you call them?
Safe deposit
safe
boxes.
deposit boxes. Those and your tax preparation fees, business expenses that you've had incurred over the year but not been reimbursed from your company. That code section is completely gone. They repealed that totally. Also, exemptions are not going to be a deduction this year. Last year in 2017, we each received $4,050 for each person in your household that was on your tax return. So if you were a family of four, you had $16,400, $200 of deductions on the top of page 2. That's gone. They repealed that as well. So there are a lot of changes. However, they also, if you do have children, they had increased the child tax credit. So families won't be hit so hard without having the exemptions as a deduction.
Right.
So they're trying to make up a little bit, but it's not the same.
Right. I mean, and so many changes and so complicated. So one last question more on the individual side. Out of all of those things you named, or then some, which provision or which change do you think will have the biggest impact on individual returns?
I think the state and local tax cap of $10,000 will. For families, especially Massachusetts and states where property taxes are high and income taxes are high, such as property taxes in certain areas of Massachusetts and New Hampshire, New Jersey, New York, California. These are states that can, in areas, have higher property taxes around DC. Sometimes, you know, property taxes can be upwards of $20,000 in a year.
Right.
And you're going to lose half that just
Right.
there. And what about the folks who live in New Jersey and commute to Manhattan? So they're paying Manhattan taxes
Right.
and New York taxes to work there. And they also have probably high property taxes in New Jersey where they
Right.
live
Right.
because it's close to New York City.
Okay, great. So let's switch gears a little bit. So for individuals, of course, always a great idea to have a conversation with someone like yourself before any major transaction like we were talking about. But let's switch gears to business owners. So with business owners, certainly a lot of tax code changes coming down the pike. We're going to talk about that in just a moment.
Yep.
But talk a little bit about the tax planning as it relates to business owners and maybe some examples of stuff that a business owner might do where they should have a conversation with someone like yourself first.
Okay. Well, small businesses, folks doing, you know, under, I would say $1 million in revenue. Some of those folks don't have time to do bookkeeping and keep track of their revenue and their expenses. And that is my biggest piece of advice I can give business owners is to either hire a bookkeeper if you can't do it yourself, or have someone you trust take the classes and do it for you, like your wife or your daughter or your sister or your brother or someone in the family that is willing to learn or knows accounting and bookkeeping that they can do it for you. And then look at the reports, try to keep up with the monthly reports, reconcile every month with your bank statement, and know where you are as far as are you making a profit. Because not
Kind of
enough
important.
people, they focus on revenue, right? How much revenue am I making over last year? Oh, my revenue's 30% higher. Yes, but did your costs go up? Are your costs going up higher than your revenue to send you into the negative there and give you a net loss instead of a net profit? So it's really imperative that small business owners know where they are to see if they are actually being profitable. And then the second half is that it's also very important for tax purposes, because if you, let's say you got a new client this year, it's a rather large client, and it's really sending your revenue, you know, up by 40%. Well, there are tax, you know, implications because you are earning more and you're profitable, you're more profitable. So you need to account for that by paying in estimated taxes on time. The new tax law is affecting small businesses enormously this time with these tax changes. There are several new actual code sections applying to small businesses. One is called the Qualified Business Income Deduction, and that is it's a quite complicated calculation. They don't make anything easy in Congress.
Of course not. Of course not. It's the IRS.
So all of us tax professionals have been working very hard this year in trying to grasp the mechanics of this new code section so that we can make sure that the software is going to calculate it correctly. So it's
right.
a 20% deduction of your net income of your business. Now, there's a lot of different rules in there, and there's also caps and definitions of types of businesses that will be it'll be
Sort of allowed
different
or not
for
allowed, yeah.
some and not the others.
Yep.
That'll be applicable to some and not the others. So yeah, it's quite an impact on small businesses, and it's for corporations. the tax law cut the corporate tax rate for C corps to 21% flat rate for everyone on their net income. So they had to do something for the small businesses. And when I refer to small businesses, I mean anybody that's in a pass-through business that is going to affect their 1040.
Right. Pass-through being sole proprietors,
Schedule C,
anything
S
that sort of
corp
goes
or
to your
partnership. Yeah,
only thing that goes to your personal return.
Yes,
right?
Yes.
So so that's a huge change in the tax code. So let me ask you a question similar to when I asked on individuals. So when you think about the notion of tax planning, but for small business owners, how often should a small business owner, right, whether self-employed or small business owner, how often should they meet with their tax person, or what types of scenarios should they look? I need to meet with my tax person. I shouldn't just wait till the end and then the shoebox over type thing.
First of all, those folks, if you're dropping off all your stuff to your accountant at the end, you're probably going on extension. But
right.
But I would say that they have to really meet with them about quarterly. Quarterly would be very good, because then it keeps the tax professional on top of what you're doing, and you have that communication. So you're able to ask the questions throughout the year and manage your business better as things come up. So if you want to buy a bigger piece of equipment or a newer version of your equipment, because it's going to make your processes more efficient, am I going to be able to deduct this? Do I have to capitalize it and depreciate it? What kind of deduction am I going to get this tax-wise for tax purposes? How will that impact my situation?
Right. And when you talk about equipment, it's a lot of small businesses, that could be like computers, copiers, printers,
vehicles,
right?
All kinds of whatever folks use.
Right, not necessarily a backhoe or something, right?
No. I mean,
it could be small things.
Sure.
Right.
It could be small things, and it could be things in restaurants, upgrading, or a variety of any equipment that you use in your business, anything that's used in your business.
Right. So as we're coming on year end, so again, like individuals, what are some good year-end tips that you would share with self-employed or small business folks now, again, to sort of get them ready for next tax season, which is really right around the corner?
So two things. I'm gonna cut this into the two different types of small businesses. The really small ones, where you have a side business, or you just started, and you're under $500,000 in revenue, say. Those folks, I would definitely make sure you have estimated taxes paid in for 2018, and not let it go into the new year. So more and more folks are becoming business owners, and I mean like micro business owners. It's just themselves. They're solopreneurs, and they don't know. They know what they do. They love what they do. They're really good at what they're making money at. They're getting new clients. They're really happy. They have freedom. They don't have a boss anymore, but they forget they have to pay for taxes. And so I've met a lot of people in the last 18 months where they started a new business. They're not on a W-2 anymore. They haven't been paying in any taxes, or they don't have any withholdings in their W-2. And now, I'm going to just have to owe. And they don't have the money because they've been putting it back in their business.
Right.
So that becomes a problem.
And so
we don't want that situation.
Right. And so just to clarify, when you talk about small business, or say micro businesses like that, it could be someone who does freelancing on the side, could be someone who sells a little product, or because nowadays you see people who sell things on like auction sites or anything kind of like that, right?
Well, anything that is defined as being in the being in business for profit.
Right.
So you're in for profit. I'm mostly focusing on folks. I'm mostly trying to describe people who are doing it full time.
Okay.
The folks who are doing things on the side, most of the time unless they're making tens of thousands of dollars a month, most of the time they're making, let's say they make $50,000 on the side, that's net income, they still have to pay taxes on that as well.
Sure.
So they can't forget. So if you're driving for Lyft or Uber or you're doing Airbnb in your house, all that money is taxable.
Right. So now on the sort of the bigger than the micro businesses side, so what are a couple of quick year-end tips for that?
Yeah, sure. The bigger businesses, and I'm sure most of them do have tax advisors. But
or they should anyway.
They
right?
should. The best thing is to have your tax person look over your financials, your trial balance, your balance sheet, and your profit and loss statement before the year end. To look at it and clean it up and see if there's any adjustments that need to be made that are going to cause a change in your net income.
Okay.
So that way, it's not going to be a surprise after adjustments get made that they're going to owe more money.
Okay. So Lisa, we have time for one last question and something that I always like to share with our viewers. So what's one piece of advice that you would give to our viewers, right, whether they're individuals or small business owners, but that people don't often see on the internet or whatever? So what's that one thing you say, you know what, even though you don't see this, this is something you should know? What would that be?
The best piece of advice I can give anyone from my experience is to hire your weaknesses. And this might sound obscure, but what I mean by this is, as a small business owner, we're doing everything ourselves.
Right.
We're taking the garbage out, we're doing our business, whatever that business, that service, or we're making whatever we are good at. We're in construction, or we do cement, or whatever business you're doing, or you're a coach, or you're I have a realtor, or whatever. But they think they have to learn everything that they have to do, instead of focusing on what they're good at.
Yep.
And hiring the things that they're not good at.
Hiring your weaknesses.
Hire your weaknesses. So we can't all be good at everything.
Right.
So that's what I recommend, because it costs businesses so much money in wasted funds every year because they tried to do stuff themselves.
Or they end up paying a lot extra in taxes because they don't necessarily know, right?
If you want to, use that as an example. I have lots of clients that, use software packages themselves, and then they come in and it's botched up.
Right, excellent. Well, I want to say thank you to my special guest today, Lisa Wright of Bookswright Advisors. Sorry about that, Lisa, for sharing some great tips with us, year-end tax tips for both individuals and small business owners. As you heard, it can be very, very complicated, and you don't want to make mistakes that ultimately cost you some of your hard-earned money. So thanks again to my special guest. Thanks to you, the viewer, and tune in next time when we take another page out of our personal finance playbook.